Hey guys, good morning. I'm going to be running an analysis on Usdjpy. I think I need to do this analysis because I've been getting some questions on why the name of the lines in my charts. And as I said, I always start from the monthly to the 4 hour or 1 hourly. I don't manage my time frame. I always look at almost all the time frame before taking any trade. So my normal analysis on Usdjpy today, I'm going to be starting from the monthly. As I said, I start from the monthly time frame for me to have a high probability setup. I don't just jump into trades. So today I'm going to be showing you and telling you the reasons why I mark up my trades the way I do. And please, let's just hold on. I will explain everything bit by bit. So I start from marking up the framework, which is I'm using phone to do my recording, so it might be a little somehow, but for beginners, I encourage you, it's not a must to have a laptop before you become a professional trader. You can as well use your phone. So I have a framework which is the monthly swing high and monthly swing low. This is the framework I'll be marking because this is the current move. This is where the current move is happening. So, and the next I do is I mark the previous candle. As I always say, I mark the previous candle highs and low, including the wick. I don't remove the wick, including the wick. So, and why do I, as I'm always saying, I always mark out the previous candle high and low because it gives me a strong support and resistance, because that's where market stops, and anywhere market closes or stops, I don't know the word to use, but anywhere market closes, there's always a reaction there. So that's why I always mark out my previous candle highs and low. It helps me to know where and what I'm working at, because I work with the candle as I work with the previous candle, because it gives me a little bit clearance on what to do. So I'll go down to my weekly time frame. As you can see on the weekly, there's nothing I mark here apart from the previous candle high and lows, including the wick. I'll change the color to red. Then after marking the weekly previous candlestick, this monthly and weekly previous highs and low, I don't know whether I will say it acts as a pivot point to me, but if you look at the function of pivot points, because it's not well calculated, because if I want to calculate it, I will calculate the high and lows of the week plus the closed price of the week. If I add them together, I'll get my pivot points. So what I normally do is that I will mark the monthly highs and lows, since it gives me a clear pivot point, which I will not call it a pivot point here because it's not well calculated, although they have an indicator for pivot point. There is a, if you go to trading view, you see a standard pivot point indicator. You can still add it to your chart, but if you don't have the means to pay for your trading view to get all those paid indicators, you can as well mark the way I'm marking, and it helps a lot. And as we are going down, I'll explain why the points I'm marking is very, very important, and you will see it with your two eyes too. So I will now go down to my daily time frame, and what will I do? Because it's weekend, I will still mark the candle that just closed. Sometimes I mark the previous, because sometimes when market close, the candle moves. Sometimes I will mark the previous, like this one. I'll mark this one. Sometimes I will mark this, and I will mark this. It doesn't matter. But if I mark this previous one, because when market opens, sometimes the same candle might move. Sometimes it will create another tiny candle by the side, depending on the pair. Some pairs normally do that. So if I mark this one, the only thing I normally mark again on this daily chart is where price close. Like, as this is a bearish candle, this was where price closed during the past week. So sometimes I mark it, sometimes it's not necessary, but if you want to mark it, fine. I'm just trying to let you know the whole strategy I'm using. I'm not doing any magic. So after marking it, I don't care how my charts look like. Even if it's showing me plenty lines, I don't care. It's my personal property. So I'll go down to H4, and I will check what is happening on H4. Then for me to, because I'm using phone, and for me to have a clearer view of what is happening, and as you can see, price is still in an uptrend here. Look at the way it forms lower low, lower high, higher low, higher high, higher low, higher high, higher low, higher high. It's formed another higher. It's trying to, until it breaks this low, especially this low. That is when you know that price is no longer bullish. So for now, we are still in a bullish trend for Usdjpy. So as we are still on a bullish trend, so our plan, our objective on this pair is for us to look for a buy. There's no need. You can trade intertrend, as in, what do they call it, opposite of the trend, but I don't encourage that, because you might get stopped out. Or if you're fast enough, maybe you know how to scalp very well, you can as well manage your trades. If you manage your trades very well, you can still get something out of the pullback, but I don't advise that. So my focus is on 1 hour time frame, and as I am on 1 hour time frame, what do I look at for? The reactions of price on those lines that I marked, especially on 1 hour. Okay, look at this place. Look at this place here. You see, once price taps through this monthly, this should be monthly low, monthly swing low. As price taps through it gave us a pin bar, and that pin bar is acting as an entry signal. Look at how price breaks through it, and after breaking through each of the points that I mark, there must be a reaction. Okay, look at it here. Price break through this monthly time, points that I marked here, gave a reaction. Price gave us a bullish pin bar, as you can see it here, a bullish pin bar. Price gave us this pin bar, and as it gave us this pin bar, you wait for another candle to close above this your swing points, this area, this particular monthly. If you see the black is the monthly swing points that I marked. So just wait for price instead of rushing. You've gotten a confirmation, first confirmation, price tap through it again, then close below, each pull down again. So you have to be very careful. So what you will do is for you to wait for price to close above any of this line, and as you can see here, price closed above, and you now wait for a normal reaction. You can set your buy limit at the close price of this bullish candle that closed above this monthly swing point. So, and if you take this trade, you see the way price has been going up, you can hold it, and your target should be the next point, which is let me say this is the weekly point. If you target this weekly point, you're not wrong. If you target the monthly point, that means you are going to be a position trader. It's going to take a while for you to get to this monthly point. So it's better you take the closest place, maybe this weekly pivot point. Let me not call it pivot, let me call it swing point, because a pivot point is calculated. So you cannot take your profit here, and as you take your profit here, you see that you made some money, and your stop loss will just be here below this wick, below this pin bar. And look at all the way here. At least you've made money. Even as price pull back, hit your target. So, or if as I've marked out all these places, now you want to take this trade, here is still open, you can still hold your trade to this daily high here. If you take it here, it's not bad. It's a very long trade, which if you follow, maybe first day, second day, third day, that was when price got to this place. And as price got to this place, you can see that there's a reaction down, then price there pushing back. And look at here again where we are, so that we'll do our weekly analysis. You see where we are. You can see that price tap through this zone again, gave us a hammer. Look at this candlestick here. Candlestick here is a bullish signal candlestick. It's a bullish signal candlestick pattern, and as it has given you this, and this particular candlestick is still acting as another block, then what do? You wait for price to close above this swing point, and as you can see, your stop loss will be below this. It doesn't matter, once it breaks this